After we have identified the acquirer, now we come to the step 2. We have to determine the acquisition date. So acquisition date is the day on which the acquirer effectively obtained control of the acquiree, and which is not the day when consideration is paid. We may have obtained control, but we may pay later, or we may have to pay earlier. So the acquisition date is the day when we effectively obtain control. Take an example. Here A acquired control of B via the acquisition of sufficient, say 80% of the equity shares. So if we obtain 80% of the shares on 1st of July 2005, so that's why on 1st of July 2005, you obtain control, and therefore 1st of July 2005 is the day of acquisition. Second example, A acquired its 80% holding in B in a number of different dates, that is 10% on 2002, 20%, 2004, and 50% 2005. So when you first have 10%, no control yet. Thereafter, 20%, altogether you have got 30%, still no control. Not until you got 50% more, that's why you have got 80% control. And therefore, the date of acquisition is 1st of July 2005. There's only one day of acquisition. On that day, you calculate everything. Day of exchange is the day for every exchange of consideration and shares, but day of acquisition is only one day. Take another example. So you acquired 10% in 2002, 30% 2003, 15% 2004, and 25% 2005. So 10 plus 30 plus 15 plus 25, ultimately you have got 80% subsidiary. But we have determined the day of acquisition. Which day is the day of acquisition? Day of acquisition is the day when you obtain control. With only 10%, no control. With 40%, no control. At the time when you have got 55, right? In most of the case, 55 means more than 50, you obtain control. So therefore, if this is the case, acquisition date should be 1st of January 2004. So you have to calculate goodwill on that day, and starting on that day, 2004, you have to prepare consolidated financial statements. Any purchase of shares thereafter will not affect the way that you calculate your goodwill. Goodwill should be calculated at the day of acquisition. So that's why determination of acquisition date is very important, because it is that day that you calculate the amount that you pay, you calculate the amount that you get, and then you calculate goodwill. After we have determined the date of acquisition, we have to measure how much we pay, the consideration transferred by the acquirer. So the acquirer pay. So in usual case, we may pay cash, right? So we determine everything at fair value at the day of acquisition. So you, apart from the cash, you may pay any asset. You may transfer to them your inventory, property, plant and equipment, everything. So we have to measure the assets fair value at the day of acquisition. But the consideration includes not only assets, it includes the liability. Sometimes we don't need to pay. We simply bear the liability of that acquiree, and they are willing to sacrifice their shares to you. So liability incurred or liability assumed is also part of the consideration. Sometimes we don't pay cash, we don't bear the liability, and we issue equity shares. We may issue shares to them, we may issue some equity instruments in exchange for the control. So all these assets, liability, and equity investments, equity instruments, should be measured at fair value at the day of acquisition. In addition to these three items, number 4 is contingent consideration. Contingent consideration is not that common, but it is more and more common now. So basically, contingent consideration means this is the consideration contingent on some uncertain future events. We have studied contingent liability. So basically, we know what is contingency. Contingency means if the occurrence or non-occurrence depends on some uncertain future events. Take an example. I may want to acquire your business. I'm willing to pay you 10,000. You think that 10,000 is not enough, so no deal. So you do not agree to sell your shares at 10,000, but I want to make it, and you want to sell it actually. So you may suggest, because you are confident in your business, you say that if your business can continue to operate at a profit for the coming 5 years, can I pay more? So I promise, okay, if your business can continue to make a profit for 5 years, I can pay you 5,000 more. So in addition to the 10,000, I promise to give you 5,000 more. You think that? Good. Okay. So we made a deal. So if your business continue to make a profit in the coming 5 years, I will give you 5,000 more. This consideration of 5,000 is contingent on some uncertain future events, because whether you have got profit or not is something uncertain in the future. So this is the contingent consideration. This contingent consideration should be measured at fair value. At fair value. Certainly, I understand that everything should be measured at fair value at the day of acquisition. So this contingent consideration, certainly the fair value will be less than 5,000 for two reasons. The first reason is this contingent consideration of 5,000 will be paid only 5 years later, because we don't know whether you have got profits over this 5 years period until the end of this 5 years. So that's why we have to take into account the discounting effect. When cash settlement to acquiree is deferred, discounting effect should be determined. This is one of the reasons. Another reason is fair value should take into account the probability as well. So if it's very remote and very unlikely that you can get profit for the coming 5 years, the probability and also the fair value of the contingent consideration can approach to zero. So the fair value of contingent consideration dependent on the present value as well as the probability. Also, when we measure the consideration, any future loss, any future cost should not be considered, right? Because this is something in future. We take into account the liability only at the day of acquisition. All acquisition related costs should be expensed. I may have to pay the lawyer, accountants, etc. some costs. So these costs are expense. This is not part of the consideration. I may have to pay something, stamp duty, etc. for issuing the shares. This should not be part of the consideration. So cost of arranging the issue and issuing the equity instruments should be reduced from the proceeds, right, from the equity issue, and therefore it will not be part of the consideration. And also for the cost of issuing liability, they are not part of the consideration. Take an example. I may acquire 60% of the shares of the subsidiary S on 1st of January 2009. So 1st of January 2009 is the day of acquisition. How much I pay? I pay 100,000 immediately and another 121 after 2 years. So 121,000 to be paid after 2 years is not enough. Therefore, we have to take into account the present value. So if this is the case, we have to determine the consideration at fair value at the day of acquisition. So that's why the consideration will be 100,000 that I pay immediately and 121,000 to be discounted over 2 years. So the present value is altogether 200,000. At the day of acquisition, I will debit my investment at the fair value of the consideration, 200,000. I will credit deferred payable, which is a liability. So the name is not important as long as you named it as a liability. And then I credit cash because I pay 100,000 immediately. Thereafter, 1 year after, due to the unwinding effect of the discount, the deferred consideration, that means this 121,000 will be closer to the payment day, and therefore the present value is to be discounted only over 1 year. So 121,000 discounted over 1 year will be 110. So this credit to the liability of 100,000 is not enough. It must be 110 at the 31st December 2009. Therefore, we have to credit further this liability. So now it becomes 110. So we credit something, we must debit something. Certainly, we should not debit the consideration because consideration is determined at the fair value at the day of acquisition. So that's why the fair value of the consideration is 200,000. Once you debit this investment at the fair value at the day of acquisition, no change. So we should not debit the investment. So what we should debit is we have to debit the interest expense, or you can call it finance costs. The same for the cost of issuing debt and equity instruments. So investments should be stated at the fair value of the investment at the day of acquisition. Therefore, if the fair value of the consideration is 1,000, investments should be debited at 1,000. If you have got issuing costs, so you may have to pay $50 for the issuing costs. We should not reduce the investment because investment must be stated at the fair value of the consideration at the day of acquisition. Instead, you may have to reduce your share capital that you have issued. Right? So you actually, when you pay this cash, you may credit cash and debit share capital because you pay this issuing costs from the amount that you can issue from your share capital. The same for the issuance costs for the bond, right? So the investments must be stated at the fair value of the consideration, and the amount that you pay for the debt issuance must be debited from your liability, right? Instead of your investment. Any professional fee, any advisory costs should be expenses.